Hello and welcome to this special report here at XM.com. We'll be discussing how gold has been trading recently and expectations for its performance this year. I'm Maria Pashurdides, and joining me is Senior Investment Analyst Marios Hadjikyriacos. So Marios, gold was virtually flat in 2022, but it started the new year with a powerful rally. What factors were behind that?
Hello, Maria. Well, it was a relatively decent performer in 2022. So it was pretty much flat, but everything else was down. So comparatively speaking, gold did pretty well even last year. Even though it started the year on a very soft note, it managed to recover a lot of that ground. Now, in the new year, we've also seen the metal stage a pretty powerful rally. Now, that came down to, mostly expectations of the Fed is approaching the end of its tightening cycle. So the markets are looking at some softer economic data coming in. Inflation is coming down a little bit. The business surveys are telling us that the US economy is losing steam, and the recession risks are, of course, everywhere. Now, the markets took that as a signal that the Fed, might conclude its rate hike cycle pretty soon, and that rate cuts might even be on the agenda later this year. That expectation pushed the US dollar a little bit lower. It also pushed yields on government bonds lower, and those two factors are crucial for boosting gold because gold is denominated in US dollars. Therefore, a weaker US dollar makes gold cheaper to buy for investors using foreign currency. Similarly, when yields on government bonds go down, that also makes gold more attractive because gold doesn't pay any interest to hold. The higher the yields on government bonds are, the less attractive gold is, and the lower those yields go, the more attractive gold becomes by comparison, right? So we've had this Fed narrative supporting gold prices, and we've also had another couple of factors. For example, we got some reports last month that the Chinese central bank has started to add to its gold reserves. They did that for 2 months in a row in a pretty substantial manner. So that's a lot of demand for gold. And the final factor is, there's a little bit of seasonality with gold. Around the turn of the year, so the months, let's call it November, December, January, those months tend to be very favorable for gold demand through the gift and jewelry angle in many countries, especially India. So a combination of factors was behind the latest rally in gold.
Okay, now looking into the rest of the year, what is the outlook for the yellow metal?
Well, I can make a strong case that the outlook seems quite bright. So we are looking into an environment this year that it's going to be characterized by recession risks. If we don't get the recession, it will probably still be a very slow growth type of environment. So economically speaking, it looks like it's going to be a harsh year. Now, what that means is gold could gain in demand through the safe haven channel in case we do have a recession, or at least in case growth slows down enough. And what it also means is, if growth is not doing well, the central banks might stop their rate increases, and they might ultimately start to cut interest rates towards the end of the year, especially if inflation comes down. So it looks like a very favorable environment for gold. And we also have, of course, central banks being a net buyers of gold, once again, also helping that argument. Now, the risks, of course, there are risks to this call. The biggest risk that I can think of is that inflation remains persistently high. That leads the Fed to raise interest rates even further than what the markets expect, and that pushes gold lower. That, I think, is our risk, but I would argue that it's a lower probability scenario, at least with what we know at this stage.
Marios, thanks so much. And thanks for joining us for this special report here at XM.com.